please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report. Well, it's 12 noon. We're halfway through the trading session. It's a good time to run you through what's going on as we speak. Well, the Nifty is trading mildly in the green. We have recovered some of those losses in early morning trade. In fact, we even went into the red. So the Nifty has recovered. The mid-cap index as well has recovered a tad bit. Let's pull up the advanced decline ratio. Remember, at one point of time, we had more number of stocks that were declining than advancing. That as well is still likely to be the case. But remember, that gap has gradually been narrowing down. So still we have more number of stocks that are declining. Even the Nifty Bank, I think, it's putting in a bit of a fight. It's come off the low point of the day. Let's see whether or not we can hold on to current levels. Hey, Sumaira, good day.
Hi, Nigel. Good afternoon to you also. And, look at the Asian screen, right? So I do understand that Hang Seng, Taiwan, they are catching up. But the Nikkei is just about 0.25% higher. So at least it looks like perhaps through the day we may not be severely underperforming our global peers. And that at least would be some bit of a sigh of relief.
That's right, Sumaira. We've been underperformers in the last 10 days or so. But let's see whether or not we can bounce off these levels. 10,300, 10,400, that's the level that we're looking at. First up, though, we run you through all the top stories. It's another volatile day of trade on Dalal Street, where the market is off the session's low. IT stocks, they trade strong. As the rupee weakens, investors are a tad bit cautious ahead of the Feb expiry tomorrow, as well as the FOMC minutes.
The rupee hits a 3-month low as the dollar gains strength, trades near 64.82 levels against the dollar.
The Coal India monopoly is unlikely to end for the next 4 years. The Coal Secretary tells CNBC TV18 that coal mining auctions to private sector will conclude only by March 2019, while Coal India chairman says it will take 3 years for new miners to start commercial operations.
Pharma stocks take it on the chin today. Stocks like Sun Pharma, Aurobindo and Biocon see cuts of 2 to 5% apiece on US FDA inspection fears.
And N. Chandrasekharan completes a year as Tata Sons chairman. Vallabh Bhansali says he would rate Chandra's performance as 9 out of 10 this year, while peer Narayan Murthy says that Chandra's decisions would be for the benefit of shareholders. All right, then we are holding in the green. Actually, the Nifty is virtually at the high point of the day, sitting with a gain of close to around 25 points approximately. But the mid-caps, well, there's been a relative underperformance, though there have been select stocks that have given a good set of numbers, but they have been ignored. Ester Industries, that stock is in focus. Remember, they delivered a profit, that's a net profit, after nearly around 8 quarters. To discuss what's their business outlook, we're currently joined on the phone line by Mr. Arvind Singhania, the chairman of the company. Hi, Mr. Singhania. Thanks so much, sir, for joining in. Congratulations. You're moved into the green after many quarters of a big underperformance. First things first, the profitability of your business really is on your specialty polymers business. Now, if that can grow at a faster clip, then margins will improve and the profitability of the company on the whole will improve. I think year to date, you've done around 35 to around 40 crores. What is FY19 looking like in terms of revenues? And earlier you had mentioned you're looking at more than doubling, tripling these revenues. Is that on track?
Yes, I think FY19 we will close around 120 to 140 crores in FY19.
In the specialty polymers business?
In the specialty polymers business, that's right.
120 crores, sir. And currently for this year you'll do less than 50 crores?
About 50 crores.
All right, so you're saying that you will double your revenues from that segment itself?
Yes, more than double that.
Okay, one more thing I wanted to ask you, Mr. Singhania. You've got an order that recently came in from this segment itself. If you could give us some more details on that. Are you expected to get more such orders? What about this order? It's for around 90 crores. It's for how many years?
It's a continuous business. It's not limited. It'll continue for many years to come, hopefully. So it's an open-ended business.
Okay. Mr. Singhania, good afternoon, sir. Is this the big order on the back of which you're forecasting this 120 crores for polymers in FY19, or are there more orders that could be in the pipeline?
No, largely on this, and there are other products in the pipeline which are coming, but we've not factored them in until and unless And we will not factor them in unless we get absolutely positive feedback and confirmed orders.
Okay.
So we don't factor in any of these things that are in the pipeline, because this is a technology business. And until and unless we absolutely hit the spot with the customers and they've confirmed and qualified the material, we never take it into our forecast.
Okay, fair enough. So at 120 crores, how much would specialty polymers contribute to your total top line? I mean, what is the scale up that you're expecting on the whole?
Well, I think in FY19 we are looking at about 15%.
So what would be the portion of polymers?
15% would be the specialty polymer business.
Which is currently at what, under 10%, right?
Oh, yeah, it's much lower. It's only 35 crores out of 40 crores out of, or let's say 50 crores out of a total turnover of about 800 crores.
So next year you're saying you're going to do more than 900 crores, 950 crores?
Yeah, ballpark, yes.
That's what we expect. Should we go with 900 or 950?
900 to 950, Nigel. It's very difficult to, because how the raw materials move, because it's a pass-through of raw material. So it also depends on that.
All right. Mr. Singhania, the bulk of your business is more or less commoditized. The polyester films business, for example. If you could give us a sense of how much of this is, value added. You were telling us earlier, looking at 30% of value added proportion or there. Has that happened?
Yes.
Or what is it currently?
It's currently at about 20%, and next year we'll definitely touch 30 plus.
30 plus.
So this will actually decommoditize and decyclicize the polyester film business, which was largely commoditized earlier.
Okay. What about this engineering plastics business? Since the focus is on increasing your presence in high margins business, can you give us what's the outlook here for FY19?
FY19, we will increase our turnover to about 200 to 220 crores from our current 160 to 170 crores. Okay. It's a steady margin business. It's not a very high margin business. It's not cyclical like the way any commodity business is. It's a steady margin business. It's steady growth.
All right, Mr. Singhania, last few questions before we let you go. What is the current debt in your books? There is some reduction in finance costs. So has the debt reduced? Or have you refinanced that? And also you've delivered a profit for this quarter, so that's great. But there are many quarters of losses. So can you continue delivering profits going ahead?
Absolutely. I think we will perform way better than we have in the past couple of years. And I think FY19 looks to be a much better year. As far as the debt is concerned, we are currently at a debt to EBITDA, if I were to talk, is about 4.5:1. And by FY19, we intend to bring that down to around circa 3:1.
Okay. And just one final question then, Mr. Singhania. You've been increasing stake. Are you going to continue down that path as well?
Well, anytime I get the opportunity to do so, I will. I am completely confident of my business. And any opportunity I get to increase my stake, I will.
And your debt in your books, you said, is 300 crores, right?
Under 300. Little under 300.
All right, Mr. Singhania, thanks very much for dropping by. So that's the word on Ester Industries, and management extremely bullish, looking at a full year revenue target of about 900, 950 odd crores, and betting big on specialty polymers. With that, let's shift focus then to a CNBC TV18 exclusive. The sale process of Ruchi Soya, which is under the NCLT, is heating up, and we understand that there are several interested parties now which are in the fray. Nisha Podar is breaking that news for us. Nisha, who are these interested parties and where are the negotiations at?
Thanks so much for that, Sumaira. Of course, it's at an initial stage because only EOIs or expression of interest have really come in, and the bid process will be the second round. That will be a little more definitive agreements or definitive bids that would really come in from the interested parties. But as we start the bid process at this point, several suitors in the fray, and some of the big Indian names like from the house of Adani Group, Adani Wilmar, Godrej Agrovet, which has been interested in Ruchi Soya for a very long time, as I understand. Even the new players like Patanjali and Imami. So these are really in the race as far as the Indian companies are concerned. But several global players have also shown interest for Ruchi Soya and have submitted their EOIs for the same, like Cargill, ADM, Musimmas, as well as Simon Darby. So these are some of the big players who in the international space have really wanted to buy Ruchi Soya and have expressed their interest. So 3,000 to 4,000 odd crore rupees is what sources with direct knowledge who are really looking after these developments have been telling us that is expected from this particular bid process. So a lot of expectation as far as Ruchi Soya's sale process is concerned. And remember that lenders really wanted this NCLT process to decide on the buyer. Otherwise, several Indian players were in touch with the company and long back had really expressed their interest. So it could be a hotly contested battle.
All right, Nisha, thanks so much for that. Well, the stock is clearly excited on the back of that big CNBC TV18 exclusive that Nisha is bringing us. It's moved to the high point of the day, but interesting to see what is the equity value once this particular deal goes through as well. That's something that we'll really have to look at because the finance cost, as Nisha told us, has been very, very high. So what happens when the new player comes in and takes over that? But I think we can cut across. We're getting some live visuals coming in from our Prime Minister Narendra Modi at the UP Investor Summit.
समृद्धि और विकास के रास्ते पर
Okay, all right. We'll keep cutting back and we'll, hear out all the important commentary that's coming in there. And in fact, when our Prime Minister really gets going, we'll go across and we'll hear out what he has to say. For the time being, I think.
Let's get in some buzzing stock action. Ganesh Benzoplast is a big buzzer. The stock is up 15% this week in an otherwise weak market. Rishi Pilani, the CMD of the company, now joins us on the telephone line. Hi, Rishi, good afternoon. Thanks very much for joining in. So first, let's talk about your infra business, which is your liquid storage tanks vertical. In 9 months, I understand you've done an EBIT of about 34 odd crores over there. So for FY18, if we extrapolate, it'll be what between 40-45 odd crores. Can this run rate now continue into FY19?
Yeah, hi, good morning to you. Like I said before also, the way we look at the business, it's a very stable business and we don't see any reasons why there should be any downturn in the business as of now.
All right, but Rishi, if you could give us some details. The market is clearly sensing something. Your stock has been relatively outperforming. Give us a sense. I mean, can you continue with this? If you do around 40-45 crores, do you see some growth coming in FY19 or is this the number we should be working with in your liquid storage tanks?
See, Nigel, as you know that we are always expanding. So the capacities that we have expanded are still not utilized to their full capacity.
Okay.
So obviously, I mean, there is some scope for growth.
Okay.
But I can't give you exact numbers or exact details. But what I can tell you is that I don't see any reason why we should not achieve our targets or, what we have done this year or better than.
Okay. What about the chemicals business then? Because this time you've made a bit of a profit actually on the on an EBIT basis. Is this performance likely to continue? Can you, move further into the positive terrain from here on?
See, as you know that I've always maintained that the chemical is a very, very strong business. And that's why we are also focused on demerging the company so that, we can have two different verticals where proper focus and resource planning is being done. And we have done some working capital infusements and all into it. So I would expect that we should continue to show some good positive momentum in my chemical business.
Okay, so since you are confirming that you are looking at a demerger, could you give us a sense of what is the timeline you're looking at? Could it be as early as the first half of FY19?
See, the process, as you know, we were started a few months back. It has various different levels of what I would want to say is that preparation of documents and finally the approval from shareholders. So I am expecting to go to shareholders for the approval of the scheme very soon.
But how soon? Give us a timeline. The last time you joined us is...
See, Nigel, I would expect to do this before March 31st.
Before March 31st, you're expecting the demerger to go through. Okay, that will be quite interesting.
But I said that before March 31st, we would expect that our scheme would be approved.
Your scheme will be approved. Okay.
Yeah, by the shareholders. Yes.
All right. But what about the debt in your books? We are noticing your finance cost has been coming in lower. But what's going on there? Have you repaid some debt? if you could tell us what is your total outstanding debt, or how have you refinanced your debt?
We had refinanced our debt in March last year. After that, we have not done any further refinancing, but we have, like I said earlier, we have put in some working capital into the chemical division, from which you can see that we have increased our top line and the profitability. Apart from that, the total debt, interest-bearing debt in our books is about between 50 and 60 crores.
50 and 60 crores. All right,
Yeah.
but you're going at a quarterly run rate of around 3 crores. So what are you borrowing at? Because for the year it is nearly around 12 crores, and you're saying your total interest-paying debt is 50 to 60 crores. So what are you?
What I'm saying, Nigel, don't look at it only from this quarter. If you look at in the past 3 quarters, together we have interest cost is only about 8 crores.
Okay.
There is a slight increment this quarter. I told you, like, because we have done some infusion into the working capital of chemicals.
Okay.
So it's only there's a small jump you can see this quarter because of that.
All right. Rishi, before we let you go, final question. There's a rumor in the market that, in fact, Stolt Nielsen Rail Services, that's a company where, the promoters or the listed entity has some interest. If you could clear that out for us, is the listed entity, does it have any stake in this particular joint venture that you have with Stolt, or is it the promoters in personal capacity that they have this stake over there? Just clear it out to our viewers, because, maybe on the back of that kind of news that we are seeing a bit of a surge. So does the shareholder get anything over there?
Nigel, first of all, as you know, Stolt is a multi-billion-dollar company. They are leaders in logistics and shipping and other services. As of now, the listed company does not have any stake in it. It's a promoter stake.
Okay.
It's a 50-50 joint venture between Stolt and the promoters. But the services that are offered are complementary to what the listed company does. So yes, we do recognize that there is a strong case to work together with this company.
But is there something in the pipeline? I mean, if you're saying that the listed company has no stake over there, then are you working on any kind of, going ahead, some kind of synergy benefits?
See, any synergy that can give some benefit to the listed companies, we are always looking at.
Okay. All right. Okay. All right. Thanks so much, Rishi, for stopping by and giving us those details. So that's a big clarification coming out there. The listed company, well, there's no stake in that joint venture of Stolt, but it's the promoters in their private capacity that have that. But demerger going through by March 2018, that's something that we'll have to keep an eye out on as well. And that's the reason why the stock has been running along in the last 1 year. In this week as well, the stock has done quite well. We have some news coming in there on Balrampur Chini. The board has approved a buyback of only around 99 crores at a price of around 150 rupees per share. So that's at a premium. But 99 crores, we'll have to just check out what exactly is the current market capitalization and in fact whether or not the promoters will be participating in this as well. So we're just trying to pull out those details. 99 crores, I think, would the total market capitalization is around 2,800 crores. So 99 crores, in fact, is less than, 4.5% approximately. The promoter stake, remember, in the company is around 41%. So we'll have to wait by to see. Yes, they are, doing a buyback at a premium, but are the promoters participating? If they don't participate, then the acceptance ratio goes up. So a buyback has come across. The premium appears very, very large, but we'll have to get further details. For the timing, the stock saw a bit of a bounce on an intraday basis. We'll slip into a short break, though. You come back, we'll get chatting with our technical experts